Welcome, everyone. Thank you all for joining us. Really excited to be here. Um, we have a great panel in store for you all today. We're going to be talking about cross-border payments and some of the innovations and some of the challenges within cross-border payments, specifically for fintechs. Um, I'll introduce myself and then we'll introduce Sarah Beth and Richard. So I lead the payments team here at Crossover. We're a bank and we've been innovating in fintech and specifically payments for quite a few years. And we're trying to do a lot more from a fintech payments perspective. And as we go through the conversation, I'll be moderating, but then also providing some insights from a bank perspective. With that, I'll turn it over to Sarah Beth to introduce herself.
Hi, I'm Sarah Beth Felix. I've been in the sanctions and AML space for over 20 years. I specialize in helping banks speak fintech and fintech speak bank, and making sure that they're all focused on what threats look like in their landscape, which you'll hear me say threats a lot today. And just really happy to be here and happy to talk about safe innovation.
Great, thank you. And Richard, can you please introduce yourself?
Oh, sure. Good morning, good afternoon, everyone. My name is Rich Mazzaros. I lead the North America Visa Direct cross-border business. Visa Direct is a global solution for real-time money movement with ubiquity in the US and access to 8.5 billion endpoints across 190 markets. I work closely with clients to design, build, launch, and grow their payment programs. And I have 20 years of experience in banking, payments, and remittances.
Very cool. Well, Rich, let's start with you. When we think about payments and innovation, specifically in the cross-border space, what are the primary trends that you're seeing? Obviously, Visa is in a unique position to kind of be at the forefront of a lot of innovation, but what are you seeing there?
Yeah, it's a great question, Keith, and I can answer it in one sentence. People want to pay and get paid on any device, wherever they are in the world, whenever they please. And so it's like you mentioned up front, the payments landscape, it's digital first, it's real time, it's cross-border. And if we think about it, these trends aren't unique to payments. We're seeing this across a number of different verticals within, the 2024 society. And we see that this is the expectation that consumers have when they think about payments and moving money. And just some stats to kind of reinforce this. First of all, mobile first. 53% of consumers are turning to digital apps to send and receive money. Real time. 90% of consumers want the flexibility of real-time transfers between their accounts. And finally, as it relates to cross-border, the US-based senders are sending $200 billion in cross-border remittances each year, and the US is the single largest outbound remittance market in the world.
That's really interesting. I mean, just huge potential there. A lot of talk that I've seen and heard many fintechs trying to focus on is real time, and then there's this real time versus instant. Those can mean the same thing, and they can mean different things. When you think about the difference, how would you describe the difference between real time versus instant, and what does that mean from a payments perspective?
Yeah, I'm really glad you raised that, Keith, because I agree, there is some confusion about the lingo. First of all, I kind of think about it from two perspectives. The first is I think about it from a payment rail perspective. So when you think about RTP, FedNow, and Visa Direct, these can all be real time, but a fast payment over a real time rail could still take days for me to access as an end recipient. Instant payments means that the receiver gets to request the funds, and within seconds, it's moved into their account. And the rise in instant payments reflects this move towards empowering receivers, and giving both consumers and businesses more control over their finances and how they wish to be paid and to pay. So this requires a couple of things. Well, first of all, you need to be connected to this real-time payment rail, like Visa Direct. But that's only one piece of the puzzle. then you need to think about the user experience, because you have to embed this functionality to initiate an instant payment into your app. So what might this look like? So for instance, imagine I'm doing a side hustle as a rideshare driver, and I could log into the app at the end of my shift, and I see my daily receipts, and I request to be able to effectively transfer those receipts directly into my account. I hit send now, and within seconds they're in my account. This allows me to stop by the grocery store on the way home from my rideshare shift to be able to pick up groceries for the evening. So think about that as a competitive advantage, for your own business, and how it could offer, how you could offer that type of capability, that type of user experience, to be able to not only support your customers' expectations around payments, but potentially to even grow users on your platform due to the unique way that you're allowing them to access their funds and get paid.
That's a really cool use case that I always love to talk about, and the idea of many of our partners, our fintech partners, constituents are underbanked or unbanked, and getting access to funds in a instant real-time manner is very important. With that brings some concern maybe around fraud, but when we also think in the context of cross-border, there's also a serious concern around money laundering. When we think about compliance, Sarah Beth, what are the main things that everyone in the ecosystem, the networks, the banks, the fintechs, down to the end consumers, need to think about from a compliance perspective, and maybe specifically cross-border and money laundering?
Yeah, so I kind of see the fin crime umbrella as having three different parts. There's fraud. Not all fraud turns to money laundering, and the way you detect fraud is not how you detect money laundering. Then you have the second one, which is money laundering. Then you have the third one, which is sanctions. And I think from a traditional like a TradFi, the banks of the world, a lot of times most banks, they outsource their current debit credit card fraud processes, right? So they aren't even thinking in that way, much less the instant movement of money. So not for the purchase of goods, but the instant movement of money in or out of their institution. So I think it's time for banks that have historically kind of outsourced that to start thinking about what that looks like when they do bank fintechs, because they haven't had to deal with that from a fraud perspective. And I think all three of those buckets really are going to live or die on how strong your KYC is. Not CIP. I did not say CIP. I said KYC, because CIP only is for TradFis, only for banks and credit unions, and or only for certain record keeping requirements that are triggered under our MSB laws. So I think it's important for everyone to understand that you can't have a good fraud mitigation plan. You can't have a good money laundering mitigation plan. You can't have a good sanctions mitigation plan if you don't have strong KYC controls. And I tell my fintech clients, like, y'all are doing so much more behind the screen than banks are doing in front of the screen, right? Whether that's a branch or an actual screen. And I think if we could get both of those sides to recognize what the other side is doing, I think it's really rich. There's so many great things that fintechs are leveraging in the back, that person who's on the other side of the screen, it is not giving up, is not actually divulging to them. And I know we'll talk a little bit later about what that looks like, right? When you have multiple layers of people that you have to trust. But I think to establish what good, sound financial crime compliance looks like, fraud, sanctions, and AML, you really can't skip past the KYC version of what is happening behind the screen. And I think that has to be understood by the bank partner, and oftentimes bank partners just kind of rely, because the fintech's doing all this cool stuff behind the scenes, and they aren't really giving themselves credit for it in their own risk assessment of their fintech partner or of their BaaS program as a whole. I think from a money laundering perspective, there's a lot more nuance there than from the fraud perspective. We're still dealing with 1980s record keeping requirements from legacy MSBs. That hasn't been updated. And then we're adding to that just a ton of really cool fintech innovation. But we're adding it to like, 4-cylinder blocks that are propping up this foundation of AML compliance that isn't ready for the weight of fintech. And I think a lot of times the compliance approach from banks is, I don't understand it, but they do, so I'll just go off of that. And so I would caution bank partners to really kind of move past what our written requirements are, which barring the most recent versions of the TPRM, because that didn't really give us anything to operationalize, right? From a sanctions and AML perspective, I think moving beyond that, banks really need to get and focus on the spirit of the law, beyond what CIP requires of them as a TradFi or a bank, but what a fintech can satisfy for them that goes far beyond what they're collecting when somebody's in branch with them. And I think a lot of times that credit isn't there. And that's a huge mitigation, both from money laundering and fraud perspective. Sanctions obviously is only as good as the information you have on the individual. And I think, there's really cool things that most fintechs are doing that they have access to that banks aren't really looking at. And that's device location, IP address, whether or not there's a VPN. There's a whole bunch of things that I know present company. When I am talking about banks, I'm not talking about present company. I'm talking about general banks. Most banks are not tapping into these just troves of rich data. So I think, I love the instant payment option. I think, like Rich said, people want to get paid faster. They're beyond checks, even though we still keep seeing all these check fraud alerts for FinCEN.
Yeah.
So
Checks are still a thing.
Checks are still a thing, but I think they're still a thing because there's people that don't want their account debited immediately, right?
Yeah,
But for
yeah.
people who want to send those funds or want to receive those funds immediately, instant payments is really cool, but I think it all needs to be taken with a grain of salt, and making sure that it's not just trying to fit this new innovation into these legacy rules, because something will get missed, and that's that spirit of the law.
Yeah. Well, SB, I love what you said about the spirit of the law and kind of sometimes reading, you talked about the TPRM letter. The other one that I always think about is last summer, the novel activities, and it specifically called out API-based banking, which I thought was really interesting because, so much of fintech is API-based banking. And to the point of data and how we use the data, there's a lot of data out there. We need to be able to use it. And there are vendors, some really great vendors out there who help banks and fintechs use that data in a very efficient way to capture and identify any suspicious activity. And one of the things that I really appreciate about Visa is so much of the data that is passed in transaction messages as the processor, cross-server can process these transactions, and then we have this treasure trove of data that we can use in all of our compliance functions, but maybe specifically around BSA AML. So, Rich, maybe to turn it over to you. As far as Visa Direct relative to maybe some of the other payment rails like RTP and FedNow, which you mentioned as far as instant versus real time, but from a data perspective or more just generally, like how does Visa Direct compare to an RTP FedNow?
Yeah, no, that's a great question. I think we've got a slide here that we're going to put up here just real quickly. So let me kind of just do a quick overview of what is Visa Direct, because I think that helps us to kind of ground that discussion. So Visa Direct provides clients with a mature infrastructure for both global and domestic real-time payments across card, account, and wallet, so that your users can move money wherever, whenever, and however they want. We have ubiquity in the US. We can reach 99% of accounts domestically via debit card. This includes cards beyond Visa. From a global reach perspective, we can reach 200 countries and territories with payout across 10 billion card, account, and wallet endpoints, with the ability to support 160 different local currency payout. And then scale is the other thing that's important here, is that in our last fiscal year, we processed 10 billion with a B transactions in the last fiscal year. That was across 2,800 different live programs and across 65 live use cases. And these use cases are everything from P2P to cross-border remittances to payouts from business to consumers, like my gig worker example that I provided a little bit earlier. It could be a seller payout, content payouts, earned wage access. I mean, all of these use cases are live with Visa Direct today. Also, other use cases from a government to consumer. These can be pensions, these can be benefit payments. And then the last area is really business payments, business to business, business to small business, things like, paying an invoice cross-border, where if you think about it, the only option you really truly have is like a Swift wire payment. And then the last aspect I would say is, from a delivery network perspective, Visa Direct is more than just that delivery. It provides a capability of value-added services, and this goes to your point, Keith, that you were raising a moment ago, that's leveraging data to be able to help manage fraud, risk, and compliance tools. And it can also help to optimize your particular program, again, by all that data. But specifically, okay, how does Visa Direct compare to RTP and FedNow? There's really a couple of things that I would point to. First of all, I think there's really three key points: adoption, ubiquity, and kind of the core capabilities. So from an adoption perspective, amongst most US RTP schemes, the access is still relatively low. Even if you look at RTP, the self-reported coverage is about 65% of US checking accounts, and that's 7-8 years post launching that particular scheme in the US. And as of this month, in September, FedNow has about 1,000 participating FIs. And so we're still, they're still on the journey to actually, drive that adoption of that service. And when you compare that to Visa Direct, as I mentioned, we can reach, nearly every checking account in the US in real time. The other aspect I would say is RTP is limited from a geographic perspective and interoperability perspective. So from a geographic perspective, they're both domestic programs. And Visa Direct complements its domestic program with having access to these 200 countries and markets around the world to be able to create kind of one capability for your fintech to be able to deliver a payment wherever your user may be. And so again, those endpoints are across debit card, which effectively moves the money into a checking account deposit, and then wallets. And wallets is also a really important point to kind of consider, because Visa Direct today can reach about 95% of the banked population around the world, but you still have a number of consumers that are unbanked or underbanked. And that's where wallets can play a factor, especially in markets within Africa, even some markets within Asia Pacific and LAC, where a wallet can become kind of the first formalized financial product that a user can in fact have access to. In other markets, like for instance, China, it can be more of a access to a very tech savvy consumer that likes the convenience of having that wallet embedded into their mobile device and using it on a daily basis as well. The third element I was mentioning was capabilities, and this really is focused on a couple of things. The first is the real-time payment schemes that we've talked about have push capabilities, which means you can push money to someone. Visa Direct is the only scheme that actually also has a pull functionality. And this is where you can actually pull funds from your account. This can be used very successfully to be able to, let's say, fund a new account that you might be opening at an institution, to move money in between bank accounts, or to fund a remittance, for instance, at a leading remittance site. So that's a really key aspect that Visa Direct allows fintechs to be able to to be able to support both sides of the transaction, both the funding leg and the push leg, so that you can meet the needs of your users based on the use case and experience that you're trying to create. And then the other element I would put here is the operational infrastructure. And this is everything that we've been talking about, that Visa Direct has been in the market for nearly a decade. We have purpose-built risk and fraud tools, experience enhancements such as aliasing and receiver-directed payouts, and exception handling processes, even things such as dispute processes, to be able to manage the entire life cycle of the payment and the payment program. And the last point, and I would be remiss without saying this, is you also have the Visa brand. And the Visa brand is well known, it's widely trusted around the world. And if you think about it, the receive mechanism for the receiver is probably already in their wallet today via a Visa debit card.
Yeah, so I think I mean, wow, first of all, 65 plus use cases. That's a lot. Is there, when you think about cross-border, maybe not all of those use cases are as in demand in cross-border versus domestic only. Maybe not, but maybe there are. I don't know. Is there any specific use case in particular that you think, not to pick favorites, it's like picking favorites among your kids, 65 kids or whatever, but when you think about the use case in the cross-border context, what are some use cases that stand out to you?
Well, obviously, from a cross-border perspective, I would be really focused on remittances. And so I think we actually have a slide for this as well. And as I mentioned, remittances, it's about a 200 billion is sent annually from the US. It's the single largest market in the world. To kind of put that in context, the global remittance market is somewhere in the mid 800 billion. So about a fourth of the remittances come from this particular market. And it continues to grow somewhere between 3 and 6% per year. And quite honestly, the growth is driven by migration around the world. As people leave their home country for, opportunity to find better jobs, they naturally start to send money home, to their family and friends. I think the reason for the send, and let's kind of talk a little bit about why do people send on a regular basis. Over half, actually 58%, send for kind of basic everyday expenses like food, essential groceries. And then you also have a good contingent that, send to help with bills. This can be utilities, this can be rent. It's about everyday expenses. You do have some customers that will send for, family events like a birth of a child, a wedding. And you also do have individuals that will send because of some type of an urgent issue. There was a storm last night. I need to repair the roof on the house, and I need to send. Money for mom's medicine. Those types of things. You have all of these reasons why people are sending money back home. Now, what I think is interesting is that the preferences from both the senders and the receivers on how they send and how they received is continuing to evolve. And I think, first of all, we see consumers like options, and they also are increasingly going digital. Not just digital on the send side. I mentioned earlier that 53% of consumers that send money on a regular basis are choosing digital apps, but increasingly also on the receive side. And quite honestly, part of that's because some of the friction for receiving cash. I have to stand on a long line. I may have to travel a long distance to get to the physical location. I'm walking out of that physical location with a lot of money on my person, and so I'm concerned about, potentially getting robbed. Sometimes these locations, they actually run out of money, during the day. And what happens is then I have to, make mom go back the following day to go get her money. And so all of those types of challenges, are the reason why consumers are starting to move towards kind of digital receives directly in their checking account and directly into, for instance, a wallet. Okay. One of the things that I would say here is debit cards specifically by 2026, we estimate that remittances to debit cards will grow to 7 billion globally. wallet to 18 billion globally, and account deposit to 43 billion globally. So just huge numbers of growth as well. And in the same time, we actually believe that cash will continue to decline, and it should decline about 5% during that same time period. Again, cash is being substituted for these digital options as well. And even if you pick a very specific market, or a specific region like Latin America, for instance, 72% of remittances are still received in cash across Latin America. And what's interesting here is Latin America also has the highest level of dissatisfaction amongst remittance receivers about how they receive remittances of any regions globally. And the top reasons for this dissatisfaction is the delays and the long lines and the concerns around security that I mentioned earlier. And so we actually believe that that market will see a higher decrease or a faster decrease in cash, and see it decline by about 7% as we substitute in for the digital receives. So we see that remittance volume is growing, the demand for options is growing. And what else do we see? What the other thing that we see the growth of is these digital wallets. And as I mentioned, by 2026, we see that growing by $18 billion of remittance volume into a wallet. And again, it's from the sophistication of certain markets like China, but also access and providing wider access to receive funds through that device. And honestly, the mobile wallet becomes that device that a lot of consumers are using for their everyday purchases, like buying their transit pass or buying their morning coffee. And so being able to get funds directly into that wallet provides a greater convenience for that consumer.
Nice. That's, fintechs love to see this shift from cash to digital, and I think that benefits everyone in the ecosystem. Obviously, a lot more data can be shared in a digital message versus handing off cash. When we think about remittances, those are driven by immigration, and typically that is people moving from countries that don't have the same opportunities due to various different factors, civil unrest, or unstable political situations, unstable economies, including sometimes not great robust financial infrastructure, which also means that oftentimes from a high risk perspective, these countries are high risk. So when we think about managing this risk, I guess, Sarah Beth, how do we think about given the demand for remittances into high-risk jurisdictions, what are some things that fintechs and banks need to do to ensure that while there's a huge opportunity, huge demand to send money back home, recognizing that back home might be high risk from the way we define risk from an AML perspective in the US?
Yeah, so I like to see every country that's not sanctioned, that means not on our sanction list on the Treasury site, as higher risk, ER, the end of that. Because I think what has long plagued the US is we have a view of our infrastructure as being the best in the world. And I do love our country. I'm a patriot. However, we have a lot of work to do. So when you look at, what we kind of consider the supranational body that goes in and evaluates countries at their framework level, the FATF, or FATF, people call it, I say the FATF. There's certain factors in each of those mutual evaluations that I think can inform both a bank partner as well as a fintech on what could be a higher risk country. I think some countries, when you actually read the mutual evaluations, the ratings that are given to them in a lot of aspects are actually better than the US, than how we score.
Yep.
So I think if we are going to try, and come up with something that satisfies what the market is calling for, which is fast P2P overseas to countries, to people that need it, we can't also at the same time then say, well, all of those countries are higher risk. because of XYZ. I think we have to look at the FATF recommendations, and this is where I think a lot of bank partners and fintechs, they go out and they look at the overall risk rating of that country, or they go off of a single report, like a UN report or a drug trafficking report that comes out every two years or so from the US. And we just kind of lump that whole country in there. And I think it's really important that we look at the particular recommendations and how they score in each of those recommendations. Like the US may have, like a partially compliant score for recommendation for 14 and 15, which have to do with fintech regulation, but really most of our fintechs in the US are without AML requirements. So that score is really not accurate. We should actually have an NC for at least one of those recommendations. So I think it's important that we don't just say, here's the N score of X country, that we look at the recommendations that are particular to the threats and to the payment flows of that fintech, and then extrapolate those, actually spend some time. Not that you have to be an expert in other countries' framework, but you do want to be able to say, hey, if we're going to bank, I'm just going to say not this, let's say crypto. We want to be able to go, great, what is the regulatory landscape as a whole in this country? Is it even a viable form of currency? Is it not? Does it have AML requirements? All of these things. And that I think that type of approach that we typically see on the crypto side doesn't ever really flow over to the fiat fintech side. And I think that type of approach also needs to be over on our side, on the fiat side, to look at what are the particular risks and the failings or the downfalls of this particular country that we're looking at rating higher risk. It's not just collectively saying everyone in LATAM or everyone in the islands or everyone here or there, because it really does a disservice. I think in addition to that, a lot of times we don't see sanctions correctly. We look at sanctions in a legacy way, which is if this person or vessel or business name is on the list, then therefore I can't do business with them. And also no North Korea, Russia, or Iran, right? And that's just kind of where everyone stops, and they forget that there's, 18 or so other countries on that list that have nuanced sanctions, and not every person is going to be listed on that SDN list. And working with a lot of both bank partners and fintechs when we're developing their sanctions approach, a lot of times, because most of our providers aren't looking at it in this way either, there is information regarding the location of the phone, IP address, citizenship, etc., that should inform the sanctions approach. That typically is just like, well, if it hits North, don't allow anything from North Korea. And I'm like, yeah, but what about Russia? What about these other countries that have nuanced sanctions restrictions, right? You have to get the trigger on that and then go, oh, let me look at the person or the business or the funds that are involved. Does it satisfy any of the other restrictions we have for this particular country? And I think that last part is the part that's missing a lot. So that's kind of my 2 cents. My thing I keep saying, higher risk countries, we need to look at the Y on the FATF, and then also on sanctions. Don't forget that second part of sanctions when we're dealing with the non-North Korea, Iran. So.
Yeah, I think, we've had a lot of internal discussion here at Crossover, and hate to have this broad brush stroke to managing risk, and to your point that specifically BSAML, it's spirit of the law and understanding what the fintech is trying to do, where they're trying to operate, and additional controls that can be put in place to provide the level of visibility that we need as a regulated institution, to ensure that the offering that we're supporting through a fintech is not supporting any illegal activity, which I think is one of the things that I'm really excited about when we think about some of these new payment rails. You mentioned crypto. I won't get into stablecoin payments, but I think there is an opportunity there. But if we think about more as it relates to Visa Direct, I think we have a slide that we can show around the data, as a processor, there was a question, and this is a note to the audience. If you have questions, please put them in the chat. We will have time. Hopefully we'll have time at the end of the webinar to answer some of the questions. But there was a question about the fact, if we're talking about push to debit card, does that provide a certain level of comfort to the fact that that card is issued by Visa? And I think it does, in addition to the fact that the let's talk about the recipient being a cardholder in another country. This information here is from our API documentation around the information that we get as the processor around the corresponding entity. And the corresponding entity is going to be the opposite of the cardholder, right? So if we're talking about an international OCT, an international push, the corresponding entity is the sender here in the US. So it's the sender of that push transaction. If, however, we have a different flow, Rich talked about the two-way functionality of Visa Direct, unlike RTP and FedNow. There is no pull functionality that is at scale, at least in RTP. You can do an AFT. Obviously, the cardholder there is then we have that information to monitor. The corresponding entity is the recipient, and that recipient might be, an account holder or anyone else, wherever they may be. We're gathering all this information so we see both sides of that transaction. It's similar to the legacy IAT, so international ACH transactions, where we're getting both the sender and the recipient in that transaction message. That's the closest thing, but again, that's ACH, which is not real time, not 24/7, not 365, doesn't work on the weekends. So this is where I think Visa Direct adds a lot of value, along with some newer payment rails. So I think that's how both fintechs and bank partners should be approaching this opportunity in cross-border remittances, and then also some of the challenges in the data, getting the data, managing the data from a risk perspective. So if we, yeah,
Can I jump in?
yes,
Because
please.
I think part of the information that's collected here and in other use cases is bank partners and their fintech partners have to understand, like I said earlier, what is collected behind the screen and at the screen or in front of the screen. Because a lot of times there's information that's collected that could satisfy this and possibly other API specs, depending on who your bank partner is and the product or funds flow that may go beyond what's on the screen. But if that conversation isn't had with the bank partner to say, hey, what out of these do you require us to collect from the user? What do you trust us to collect behind the screen and verify? And I think that's an important aspect of still keeping the spirit of innovation, which is solving a problem, because we don't want everything to look like a bank, because then what's the point, right? If we have to give up all this stuff and we're requiring it of this person in front of us, and that fintech looks just like a bank, and we're not trying to look like that. And that's where I think that conversation isn't had nearly enough. I probably pose this question once, maybe twice a week for the last several months to each bank partner. All right, great. What do you want us to collect from the customer? What are you comfortable with us doing behind the screen?
Yeah, and I think like the so many times when I'm talking to fintechs, all different size fintechs, they're focused on taking friction out. And specifically when we think about cross-border, there is a lot of friction I love the point of behind the screen, because there are so many ways to supplement data that is gathered on the screen, right? Again, we talked about other vendors that provide that information, and there's so many ways to gather that. Yeah.
And it's so much better than our legacy bank onboarding, right? Our legacy bank
Yes.
onboarding, I hand you a library card and, a letter from the IRS
Yes.
maybe, and boom, right? There's really nothing behind the scenes other than a check systems thing to see if I caused fraud at another institution. That's it,
Yeah.
right? So there's a ton of value. That's what I was saying earlier. There's a ton of cool stuff that happens behind the screen.
Yeah, yeah. Um, we're running short on time. There's a couple questions that came in beforehand and a couple questions that came in via the chat. Just one from the chat. Visa Direct sending, receiving limits in the U.S. Rich, I don't know if you know this, but I think domestic is 50,000, international is 10,000. Is that? I think
It
that's
depends.
still
It depends on the use case. It is
okay.
higher for certain use cases. For send a debit card and for you send to account,
Okay.
there is not a limit. But you can also apply velocity limits on your program. And that gets to, Sarah Beth's comment around, how do you manage and mitigate your risk and how do you think about your overall program? So there's tools like that that you can tailor it based on your specific risk appetite.
Okay. Perfect. Some other questions that came in. Single biggest pain point limiting faster cross-border payment adoption. Just to answer that from my perspective, it is managing the risk specifically in some of these high-risk jurisdictions. But I don't know, Rich or Sarah Beth, if you've got other ideas about pain points as we talk about cross-border payments growth.
Yeah, I'll start. I think I mentioned a couple when I was talking about remittances, but I think the pain points that I see from consumers when we research with them is just some of the friction with cash, the concerns about the cash, the inability to pick it up when I need to, the concerns about walking, out of a physical location with a lot of cash. These are everyday experiences that consumers unfortunately, have to deal with. And, part of this is about, widening access to the digital options so that, consumers have that convenience of just having those funds directly in my account. 24/7. You
Right.
know, if
Yeah.
you think about sometimes, you may not, if you send on a Saturday morning, you may not be able to get those funds until Monday or Tuesday. Where if you send on a Saturday morning and you send a debit card, those funds are there within minutes. And so that just, completely changes the user experience and the value proposition for both the sender and the receiver, and ultimately what the fintech can then, offer to, their user as part of their overall service and experience.
Maybe one last question before we wrap it up. We've talked a lot about innovation from a payments perspective, payment rail perspective. Let's talk about, and maybe we covered it maybe at a high level, but from an AML innovation perspective, what is the most important adaptation that AML teams need to embrace when it comes to cross-border payments?
Well, I say it a lot, so if you've ever heard me speak before, I feel like a broken record, but it would be a threat-focused approach or a threat-first approach. And that is something that is underutilized. Bank partners really have to get in that mindset. And what I say is put on the mind of a criminal. How would a bad actor use my fintech A, fintech B, and all of their products and services to run funds through my bank? And fintechs, same side, because they're closer, they also need to do that, but they need to communicate their findings, because if you don't do a threat-focused approach, then everything else that comes after that's going to be weak. And if you don't have a bank partner, you have no business. So really, fintechs have to have a threat focused or threat first approach, really getting to the heart of how someone can exploit the rails, assuming that someone is going to, if you're a current fintech, right? This is pre-tech stack or early tech stack designs days. And you can get to the heart of that. That should inform your risk assessment. It should inform all of your controls, and it should inform your conversation with your bank partner. And then once your bank partner knows, hey, they've figured out this, then it makes that a relationship, a longer term relationship. But to me, that is not like super techie. Like you don't need a whole bunch of technology for that,
Yeah.
right? This is an
Yeah.
easy at home exercise that you can do. You don't have to go to the gym. You don't have to buy a membership. You can sit on your couch and do this. And so as far as like a techie adaptation, I don't have that, because I feel like we have to answer this first question before we try to do anything fancy.
Yeah, I love that because you didn't say AI.
Right. Yeah.
right? And so many times no, but if people, machine learning, like we talked about data, and there is a lot you can do with the data, but if there's not a level of expertise around what you're trying to manage, both within the bank and within the fintechs, like we when we look at onboarding a fintech, we need to see that they've got a level of expertise. Yes, they've got tools and they can use AI and whatever other innovations from a data perspective come out, but if they don't understand what the threats, I think that's really
Well,
really
and
important.
AI is only as good as the human that trains it.
Yeah.
So if the human that trains it isn't thinking that threat mindset, then that AI tool is going to be weak and
Mm,
probably a little dangerous.
yes. Yeah.
Yeah.
Because it gives a false sense of comfort. Yeah, for sure.
Mhm.
For sure.
Yep.
Okay, just one last question, crystal ball prediction time. As cross-border money movement evolves, what do you think the key innovations driving the next wave of growth would be? Rich, why don't you start there?
Yeah, I think we're going to continue to see a move away from cash receipt and moving to these digital options. I think we're going to continue to see the growth of not only remittances, but any, B2C type payouts as well from a cross-border perspective. As we see all of these innovative fintech models that emerge, two-sided marketplaces, gig economy type, businesses, there is a need to be able to, pay out those sellers that are on that marketplace. And so, in many cases, the existing solutions of sending a wire or what have you are too slow, too expensive. They don't have transparency. And so the ability to be able to use something like Visa Direct to be able to enhance that experience is there. And then the last thing I would talk about is we didn't talk too much about this, but interoperability between some of the P2P apps as well. And so if you think about it, I have PayPal and Keith, let's say you have Venmo and we went out to lunch and you picked up the check and you want to reimburse me, there's no way for us to interoperability do that today. I'd have to go open a Venmo account or we'd have to use a checking account as an intermediary. And Visa solved that with a capability called Visa Plus, which allows me to create a unique pay name on PayPal that I can provide to you, Keith, and then you can send money from Venmo directly into my PayPal account. So it creates that interoperability between these kind of closed ecosystems. I think that's the next wave that we're going to see to kind of open that up, not only for fintechs, but also for banks to play as well.
SB?
Mine is not as hopeful. Rich had great hope, and I am looking forward to all of those things. Mine is more pragmatic, if you will, because I feel like we're still not getting it right. We've had the exam manual for almost 20 years next year. And so just the basics of AML and sanctions, we're still really struggling with. And then we add in the complexity of fintech and BaaS banking. And I think that's made it more difficult. There's only a handful of bank partners that are actually doing the right things when it comes to faster money movement. And given the 65 plus use cases that Rich had gone through, when I see those, I see a list of fintechs under each of those use cases. So if we
Yeah,
extrapolate that out, it's
sure.
literally thousands of different ones. And the thing that banks keep forgetting, most of those fintechs do not have AML requirements in the US. They do in our peer nations, but not here. So without proper definitions of what fintechs are in the US, what money movement looks like, and what AML requirements are, where it's not always pushed to the hyper-regulated bank, I feel like we're still going to have problems going forward because our federal framework has failed us.
Yeah.
So
I mean,
it's such a
the
positive note.
the no
Thankful.
the regulatory environment is changing.
Mhm.
Um, Feels like almost daily. And I think well, we do need more clear guidance, I think, to your point around getting to the spirit of the regulation, and we can push innovation forward. Rich, love what you mentioned about Visa Plus. We're enabled on Visa Plus, just signed the agreement, 2-3 weeks ago. So we're excited to see that. Um, and I think to the point of doing it responsibly, having the data, we talked about the data we get, processing those Visa Direct transactions, and then I think there's an opportunity when we talk about cross-border around stablecoin, and I think there's opportunity there. So I'm excited about what is happening in this space. I think it's a huge opportunity for everyone involved, and it's got a very long runway. So wanted to thank you both, Sarah Beth and Rich, for joining. Thank you for everyone who dialed in and listened to this webinar. We didn't get to all the questions. We ran over time. Thank you very much. And we will be following up with you all later. Thank you very much.